Hi, afternoon, Bletchley. Can you hear me all right? Mute that. Hi, Bletchley. Good to have you. Are you winning? So that was the nerdiest of nerdy looks at some inflation data ahead of time, but it does help to look at it in the extreme like we did because it gives you a chance where we might occasionally have um, short-term beats, things that market aren't necessarily thinking about. But it's good to know how these things are put together so you can see how it reacts. So we'll have a look at how I go and look at that in a minute. Um, Ola the storyteller, welcome. Not seen you before. You need to add a local CU. What's that? Boom, boom, boom. So if you look at the data that came out just now, we're on the Eco Diary. That came in at spot two straight away, which is what we were hoping might happen. Scanning through the rest of it, all came in lines. 2.8 for the yearly core, 2.7 for the price index itself, with nothing stripped out. These were interesting. Personal income, so I just put on the chat. Previously 0.5, zero point 0.7, expected to drop, and they're both on, if not below. You need to all local bank transfer. I think that's something for support, mate. I don't do that. Boom, boom, boom. Maybe it's because I'm talking away from the mic. Is that what it is? You might have to bear with me today because my house network has blown up. So I'm expecting people to mess around with it in the background. So if things go wrong, that might be what it is. I'll switch this to a different screen. So can you hear me better now? So the idea in here that's relief for the Fed as much as the PCE. There we are on the right mic. Right, I think we're back. I think we're back on the right mic. Is that better? Brilliant. Right, we're off and running. Don't know what's going in with my systems today. Rubbish. So you said before about going to the right website for the data release. So Bureau of Economic um, Analysis, BA.gov. You go in there, homepage, personal income and outlays is today's release, and that is what everything is in. So once you go in there, they give you loads of other stuff as well as just the headlines. So as I said, you want to know what is going to happen with the data. So if you go into the tables, that downloads, and I've already downloaded into my numbers page. And let's see if we can switch to that for you to have a look at. What's it gone? So can you all see that? That's no good, is it? I presume you can just see that as a small square in the corner of the window. It's not. Let me see if I can. Postage stamp. Yeah, that's ridiculous. That's supposed to be sharing the screen. Let me try again. I'll do it a different way. I'll take a screenshot of what I want to show you because it's. Where have we gone? Right, is that showing? I know, it was there a minute ago. Hold on. The worst presentation I've ever been on. What is going on? Right, come on. Let's try again. Excellent. You can see it now.
Sorry, I'm having trouble connecting to the internet. It looks like there's an issue with the router and Echo device, so try restarting it. Unplug it, then plug the router back in. Wait 30 seconds. Once the router is back on and connected to the internet,
Alexa,
plug in the Echo device.
stop. I told you it'd be fun today. Things coming back alive. Right. Okay. So once you download that tables data and you go to table 5, it shows you the numbers. So personal consumption expenditure, right? Work it out if you're without access to data, if you get to a website. So PCE excluding food and energy, that is the 4. So we do take those numbers there, 121.909 this month's index. Divide that by 121.606 last month's. That comes in back to front there, 1.002491.6. So that is exactly what we needed. Something below spot 0.025 was going to get us down to the lower print. And we said that was a massive chance, particularly as checked with a guy who had Bloomberg earlier. Just a couple of people had changed their consensus. The average was spot 25, which had to be rounded up. So it was unlikely we were going to miss on that. And there was a good chance what happened happened. So we'll take that as a win, and that's just a good way of being on top of the data in advance, rather than it being a gamble. You've got a good idea of in advance exactly how to set up for it. So let's go back to where we were. There it is, calendar. Sylvester Treve, what would you like repeating? Okay, one sec. So if you go into the bea.gov website and go into the actual release today, you can then download the tables. This is the table 5, which we're on at the moment. And that shows you all the actual index levels. That's how they interpret what the move is per month. Once all the data's been put in, it'll give you an index level, and then what we see is the actual percentage moves. This is how you do the percentage move. You take this month's core number, one excluding food and energy, 121.909, divide it by 121.606 last month, and that, if you look at it up here, these are provisional, and revisions have P's and R's on them. So when you look at data series, you need to know which ones can get changed month on month. So that is the latest figure they had for March. You've seen how much it's increased, and that came in at just below spot 25, which is what we're hoping for in order to be rounded down spot 2. It had only gone up during the week because a couple of people had moved to spot 25 for their estimation or slightly above. And that's what made, once it was at spot 25 for the average, it got rounded up to spot 3. So I kind of looking at that in advance, thinking that gives you a really good chance. It only has to go back to where we thought it was coming in the first place. Remember, spot 24 was the original middle point, average point at the start of the week. So it left us pretty much, gave us almost a whole 0.1 before it would have to go up to spot 4. And any 100th miss to the downside would get us this spot 2. So brilliant. That's how it played out. So hopefully a few people played that and were ready for the bounce out. And if not, you were looking for what would make you try and close a position, etc., etc. But just gives us a way of being ahead of the data, get a little bit of a deeper dive rather than just looking at the headlines. This is where the boys, the hedge funds, will be all over it and have their economists and strategists diving in straight away. Hopefully that was useful. We'll try and look at other things. If there's any questions, anything anybody wants to look at, just bang it on the chat. So that was today's tweet with good old Diane. Poor old Diane Abbott being ousted at, from the Labour ranks. To be honest, I don't know why they're even causing ructions, as I said in the tweet. Just making everything feel a bit more uncertain. Just to be honest, the Tories are buried, aren't they? So this is just an advanced way. I've got it constructed for next week. Anything that anybody has missed or wants to go over that's happened this week? I've just got my tech man coming on to me. So I think Kashkari, despite the fact of being taking the mickey out of him, has been abused by the media. Obviously, someone in that minutes of the minutes made that comment in order for them to put the line in that I highlighted. But it said various people mentioned that there might be a chance that rates have to go up. well, that's kind of obvious, isn't it? If the data goes the wrong way, then there would be a chance. What they weren't actually saying, if you go back through the comments that people have made, and Kashkari was the most hawkish, and he was the one that came out in the following weeks, going on about the same thing. So he's made a point, and he may have been backed up at the time by Bostic, but on the data that came out in between, Bostic definitely highlighted the fact that rents were coming down, and he was keeping an eye on it, wanted to see one more. Kashkari, even this week when the media, the Bloombergs and CNBC have gone all over again anything he said rates. He's actually said that he hasn't changed his mind since March when he could see there being 2 cuts. Now he's saying, now he's saying he couldn't possibly suggest there should be more than 2 cuts. And this is from the guy that has said, and is supposedly being used as the poster boy for rates might still have to go up. He's still a million miles away from that. He's being realistic about the data. Yeah, well, the whole point is Kashkari is not. Thank you, Bletchley. Kashkari is not a voting member. Right? So, as you can see on the picture here, this is what the Fed meeting looks like. Okay, and we can count how many people are in the room. There's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, another 6 there, 23. A couple of those, one of them's taking the minutes. There's probably another couple of officers. There are 12 members of the voting panel. Then there are 5 reserves, and then there's the 3 that are left. So, when I say 5 reserves, there are the 5 other central banks that aren't part of the thing. They rotate. There's about 11 of them. They rotate round, so 5 of them are in at any one time, and then the other 6 are sort of in a rotation period. So Kashkari doesn't come on until 2026. Minneapolis are at the back of the queue, basically. So yeah, if he's making any comments, they're just going to go in basically in the column inches, aren't they? It's not. He's not actually going to have a vote. It doesn't matter. It's just going in the annals. It takes 5 years before any of it gets released, unredacted, so that you know exactly who said what. So I thought that was very poor, as I keep going on about the way that whole thing was constructed. Somebody in the media really wanting to create headlines and stories rather than tell it as it is. Really frustrating, but like I say, we put all this work into it, spot it when it comes out and it doesn't feel right. Boom, boom, boom. The big thing which we highlighted at the start of the week was auctions, and there hasn't really been any effect from these buyback ones. I said bond auctions, bills and bonds. Bills are short-term bonds. We just call them bills to differentiate, and the bonds start when it's like 5 years plus, really. And yeah, you're probably right, Haldy. He's trying to get himself onto programs and make sure he's relevant in the media. So we wondered whether there'd be any impact by them trying to rejig the actual bonds that are available for investment by retiring the ones that don't make sense anymore. So they're the ones that might have been issued at much higher interest rates, bigger coupons, and they don't make sense because they'd have to price them really low, or the reverse. They were issued when interest rates were 0. You had to have a really low coupon at high price in order to be in line with what current market yields were. So that all kind of makes sense. And this is one of the reasons, again, from what Kashkari said, that he's surprised that the mortgage rates weren't having more of an effect. But what they've got to realise is that so many people, and it's a more sophisticated market in America. They've got a mortgage market that goes all the way out to 30 years. It's something that the UK should have done during the whole GFC debacle and doing QE. They could have created a UK hedge fund to be the other side of this, and we could have written everybody really low mortgages and taken away the amplitude of future recessions, but they weren't bright enough. But in the US, it's quite sophisticated, and you can match. So a lot of people aren't actually being hurt in terms of their mortgages from higher interest rates because they're all locked in for 10 plus years with very good loan rates. So a lot of the interest rate tools are always accused of being blunt, and that is why perhaps they're not having as much effect. So, as always, talking heads, there are going to be people who used to be in the Fed that like to say things, one of which is a guy who was very popular, who was very good, Bill Dudley, and he was all over the tapes this week talking about he doesn't think rates are restrictive enough, which is easy to say when he hasn't got to vote on it or be responsible. And I don't know if anyone's seen it, but they've been talking about R star. So R star is the neutral rate, level of rates. We have discussed whether they're gonna come around to having to accept that might need to be higher for in the long term, but it's kind of that's at 2% at the moment in the models. And if you add on 3% inflation where we're running, then you've got real rates at 5%, and you've got Fed funds at 5.25, 5.5. So he's saying, is that restrictive enough? Is that actually causing any issues? So he suggested it should be higher indefinitely rather than higher for longer. But I think that's a bit unrealistic. They have got things still going the right way, trending, and it only needs a little bit of more downside to the employment and growth data, and it'll be a rate cut. Yeah, it is good until they package them up into CDOs and blow the world up. I mean, that was ridiculous. If anyone lived through that, how they got away with that, I don't know. Because they used to package, sort of Z credit with B credit and a few A stars, and managed to get A star ratings on the subprime packages, the combinations. And I say, anyone that's watched The Big Short knows if you're happy to put the work in and actually looked at the individual bonds that were in it, as they did, they couldn't actually believe what they were seeing. It was, the average rating should have been, C minus really at best. It was complete and utter shit show really in terms of regulation. It was dreadful. So what else have we been talking about? You mentioned it yesterday that despite the markets coming off, Nvidia has actually been up 20% since its rise. Again, technical wise, that's 7% of the Nasdaq 100. If it's up 20%, that means that's been responsible for 1.4% of upside while the market's been coming off. So let's hope that doesn't go into consolidation in the next few days. Oil data during the week. I said it was pushed back a couple of days. And what did we have? I'll just go and look at that for you. So Wednesday was the API data, came out late. And look, finally, we got a nice big drawdown, 6.49 versus 1.9 expected. It had been a build last week, but didn't really move on oil there. They were waiting for the EIA data the next day, which mirrored it on the crude oil inventories, another big drawdown. But we didn't get much of a spike because the problem is distillates and gasoline, so the kind of byproduct, they're still in backup. Kind of means that the actual demand isn't really coming through there. So we haven't had much of a move in oil, as we sort of suggested. Is it June the 2nd? Sometime next week, I think, is the OPEC meeting. So we need to look out to see whether they really need to do another big cut to have any effect. Let's see whether they've got the ball to do it. They're missing out while America keeps pumping. Flick through the diary while we're here. It's easier in this form, isn't it? Anything. So we talked about Germany's kind of bobbing along. Eurozone inflation, yeah. So we've had little bits during the week, haven't we? Of slight beats. That was some sub ones. When did it come through? It's Wednesday, wasn't it? So yeah. So as Gerard said, all the regional ones, they're all coming in fairly robustly. But what was crucial was that the expectation for the afternoon was that, look, they were supposed to bounce, and there's been a lot of chatter about it. There's a yearly base effect, which Germany apparently put in some new rail fare system a year ago. So that is dropping out of the numbers this year, which means that this month's inflation was always gonna jump up. Germany is probably the biggest economy within Europe, isn't it? So that has the biggest effect into the overall number. So even though the next day we've got um, was it France and Spain, wherever they were, not find them, were kind of in line. Check it, red, just can't find them. France and Spain were in line, and Italy was just below. The net effect was that today's Eurozone inflation, yesterday's Eurozone inflation. I keep missing out. Yeah, sorry, it's today. Yeah, so today's Eurozone inflation came in a touch above expectation at the core. Even on the yearly basis, slightly in line. The CPI headline figures were more or less in line. It was a core where we had the bigger bit. But apparently, listening to the European economists, they're not really that bothered, and they're convinced that plus last week's extra wage data isn't gonna have any effect. We will get the rate cut at next week's meeting, but in aggregate, that's probably definitely gonna push back the next cut to September, like Nagel was suggesting. So we might start that. Probably helps with the whole narrative of GU and EU still being in a general uptrend rather than in a complete selling off pattern. We're just in a consolidation pattern at the minute, and they may start coming out of that. Remember to have a look at the CFTC data tonight when that comes out. Remember last week it showed us that the dollar positioning on net negative, mainly on shorts on the EU. That's another powerful argument going forward. Some of that EU short will probably get unwound on the pushback of rate timing. And we suggested that the bets against the yen had gone up last week, and so it proved. I mean, look at that again in the charts. They've been taken back to the yen intervention level. I mentioned yesterday, we must keep that in mind, that there's every chance they get pushed too far, that they may well opt to do the selling of US Treasuries. That would be a major sell-off consolidation event for the market. It's one of the biggest holders external to the US. China's been selling. We don't really need any attacks from that, and certainly if it's not coordinated with the Treasury, which Janet Yellen has asked to happen. The good thing overnight, early morning that came through was in China, their data missed. You can see there it's still in aggregate. The composite is still in expansion, but their manufacturing and even their services are going backwards. We were hoping that it caught an uptrend. But what seems to be happening is the national PMIs are consistently softer than the Jackson ones, which are the private ones. So we'll see if that continues in the next couple of weeks. This was good though. Tokyo CPI was up with expectation at 1.9, going up on the yearly basis, flat on the core. To see that not being affected, industrial production, we'll see some underlying growth. We don't need them going in anywhere near contraction. Don't need any unemployment getting in the way. It was that large retailers' sales were up. We were worried that these energy prices, imported oil costs with the weak yen were gonna start causing problems. That's net day of data there, inflation and retail sales. That helps believe that we're not able to get away with a rate hike at the next meeting, perhaps. The market seems to be they want to back themselves into the corner now. They'll need to do it, otherwise the market will push towards that 160 level, if not beyond. And they're just gonna have to face it. You can keep spending lots and lots of money on interventions, but you've got to deal with the primary issue, which is the massive differential in interest rates. We've got to make people believe that they're on an upward path, not just we might do it. What else we got? We got anything left to come out today? So Atlanta, that's worth looking at 3:30. That's the Atlanta Fed GDP. They will put in all the factors we've talked about that have come out during the week. Obviously, today's PC will feed into that. And this is their estimate for Q2. We were dealing with Q1 figures this week. This is showing you that their estimate using all the data up to date as it comes out week by week, that they're actually running at a decent rate, which is why a lot of people are ignoring how weak it suggested on that second release for Q1. It does look like there's a pickup somewhere in the system, which shouldn't be a shock if people are watching everything in aggregate. So anything else on data this week that you didn't understand, or impacts or movements? Is anyone still there? Anyone playing? So I thought we'd look at some charts. Let's go and try and do that. We need to redraw a couple of things. We've been doing quite a bit of Elliott wave on the chat, which one or two people have been trying to do. Can anybody just reply to me in the chat? Is it still working? Is everyone still there or not? Miss Watanabe is having a good time in Japanese yen. Yes, all good. Still here. Brilliant. Right. I mean, while you're here, are there any charts, instruments you really want to have a look at or discuss? Okay, we'll come back to indices then. Let's go for gold. Going for gold. Where are we? Sean B, 1991. Right. So have you been following what we've been talking about on my Discord chat, or are you just new to this today? Look at the previews. Just so I know where you are in the conversation. So you're holding a short from 24.49 to the all-time high at the moment. Okay, cool. What's your thoughts? Excellent. Good stuff. Just before I joined. Oh, shut up.
Sorry, I'm having trouble connecting to the internet. It looks like there's an issue with the router and echo
I'm just going to
device.
pull the plug
So
on
try restarting them.
my friend.
Unplug both of them, then plug the router back in.
Right. So yeah, I think we come back lower. So yeah. So what have you been following? Well, I've had this nesting idea. If you've been following me, of ones and twos, and then breakouts, and we're kind of in the three waves, and we're in the sort of red minor three wave up. We've done a third wave, and this consolidation from the all-time high is the minor wave. It's the minute wave 4, which at some point is going to finish, and then we go to a new all-time high, which I think is still in the 2500s. But at the moment, we are working our way down. We've kind of decided that the best guess was going to be zigzag, which meant if we had 5 waves down, which is what we thought we had, we'd then have a consolidator and then have another 5. What's complicated the whole thing and the timing with PCE, which we've kind of said we were set up for relief. We've gone through that at the start of the video, is that this leg down that we had to yesterday's low does have a valid 5-wave structure inside it, and it is a new low for the whole move. It's not very big relative to the first one, but it does mean that it is valid. There is a probability that we have put in the low for that wave 4, but it is a low probability in the whole setup. The issue we've now got is we were expecting the bounce in gold, and we said it could go and have a look at the current top, which is 23. A bit bigger so we get the numbers right. So that current top is 2363, isn't it? Or looking at that candle, that wick, 2364.12. So can we take that out? In which case, this current run would invalidate the one, the 1, 2 of 5 down that I've got in place at the moment. Because if we put a connector in and we're now in the next set of 5 waves down, we've done 1, which is that 5, and we're looking for a 3 wave, which is now looking pretty much in line and almost at a 1 for 1, which is what we were originally looking for. We don't really want it to overthrow, in which case we might have to say that this B wave in total has extended. So it wouldn't be a disaster for the downside play. It would just mean that we haven't actually gone into the C wave down yet. Now, we've just got to see how we react as we get around here and whether it holds. Because again, remember, this is the wave 4, then we're gonna start moving out aggressively. So just be careful of being really ripped out if we go through that 23.64 level. But yes, exactly, and this is what we were talking about on the chat earlier. What happens on the last day of the month? You get a lot of people taking off their core positioning to lock in profits for the month, and they'll quite easily put the positions back on as soon as we start next week. But sometimes they just have to, depends on their risk management and performance management measures. There are a lot of people who do have to close out on the end of the month. It's very frustrating for people because it gets a lot of underperformance into investment, which is why a lot of um, active asset managers, etc., underperform, and that's what upsets people, and that's why they go into trackers. But we're dealing with gold here, but that again could easily be investors that are just ruling off for the month. So yeah, it's very easy we could get fake out into that, and we just described how that could be a valid pattern, and it could have quite a bit of overthrow, anything up to 1 spot, 3 times this wave down here, which was 64 down to 22. So 42 and times 1 spot 3, so you can have 55 moving up from there. So you could get into that sort of early low 70s and still reverse, still not be an invalid 3-wave consolidation. Ultimately, I mean, obviously, I'd love having put some away up here in the 2380s for the breakout. I'd love to see it get back up there, but it's not my at the moment, first probability. I think we've got to just go through this extended profile. It's been very impulsive on the down legs. Just again here, you can see I like to look at gradients, very steep gradient down, classic sideways gradient, even if this ends up being an extended one. But within that, if that is a small degree B wave within that sideways structure, it's still impulsive in the direction of trend. It all kind of suggests that the bears are in control, and that, by definition, suggests that we will probably get another steep 5 waves down to the bottom of this channel if it comes. So that's kind of where I am on gold at the minute. It's all about how we're reacting at the kind of crossover level. We were looking for this bounce. Um, even some of the indices have bounced, but it's being faded a little bit already. Is there an alternative setup to what we've got there? I mean, some people don't, what do you call him? On my chat, we've got I think it says his name right, Reshinu, who likes to look at the waves. He didn't really, or he or his mentor didn't agree with what I've got here for the end of A, which 3 fitted nicely, waves down to there. There was a small bounce and then a very small further low along the bottom of the trend channel. I do think that is a valid uh, sub 4 wave, sub minuet 4-5. I'm pretty confident that is an A wave. The only other way of looking at it was that that was still part of the 3 down move up to what I've got as B, was a quite steep protracted wave 4. And if you remember from what I said about alternation in Elliott wave, you often get whatever the 2 wave is goes the opposite way. So whereas that looks relatively steep, I suppose this one is sideways and relatively shallow to the wave. So it's a potential that that could be a 4 and we put 5 in, and that another alternative is that that is A. So in which case, this bounce back here would be relative to the whole move down. So you could get a deeper move halfway from the basically 125 points fall. That gets you 60 off that. So that'll get you into the sort of the 50% retrace, will get you into the 80s. So that's another chance. That all depends on how you've countered those waves, and you know, you can't ignore it. It is a potential, but I'll stick with what we've got until we break out. Then we might consider that. But having said that, I said we want to be preparing once this all runs out of steam or we work out it's going up. We want to be on it. It's got a couple hundred points minimum upside from here before we put in a proper real consolidation, I think. And then obviously from down here, that'd be a 300-point move. So we don't want to miss that if we get the chance. But well done, Sean B, for being on that. Because there's a lot this way this worked out, there's a lot of head fake. We had to keep redoing it. Lots of three-wave valid consolidations and extensions. And really in here where it started accelerating to confirm. Good plan. Obviously, some people. The other thing that backs this up, I've forgotten who it was. This somebody on my chat on the 4-hour was quite an obvious head and shoulders. If you can ignore all my writing, etc. There. Remember, I've got the Bollinger Bands in there. So at the moment, the Bollinger Bands is right in no man's land, despite the fact that we've jumped. We're really interested in continuations in the out standard deviation between the 1 and 2. That's where you tend to get the trending, and in between the signalling, just moving around the mean. So, just that ties up with the fact that most people play Bollinger Bands in terms of once it's crossed one side, eventually it goes to the other. You've got to make sure that it comes out and does go into no man's land on a candle with 75% body. Otherwise, you can get whipped and dragged down, like in all these scenarios. It's very, very, very clear. You get faked back in, you can suddenly get dragged right down. But the point of this chart on the 4-hour, very small downward sloping neckline, head and shoulders pattern. We haven't had a close below it yet. See here, we wicked it, and then the closes have both been above. To be valid, we need to see a close below and for it to continue trading down. Sometimes you get a fake out that actually comes down. So it needs to come down and stay down for a few candles really to be valid. We haven't got that yet. But that is another thing that we'll probably see acceleration if we do get this continuing as a 1 down, 2 up, go down, or it finishes here and we go into wave C. This is probably the place where people are waiting to see it happen just to get further confirmation. But that is powerful. I was glad of the reminder because I do like to look for the head and shoulders. In other parts of the way people modern look at their retests, aren't they? So is that clear? Any other questions on our good old friend gold? So if we believe in gold, remember we must believe in silver now. It is starting to have those effects. It's going to follow gold, but it means that if we are in this consolidating pattern, down, up, down, three-wave pattern, looking for equal legs, gets us down into this what looks to be strong demand zone before. Will it come off that? Will it hold that? We don't think it's going to drop much below 30. I think that people queued up to buy it in sub 30. All the professional silver traders are dying to get a chance to reload down here. So that would make sense being an equal legs wave 4 fits in with a quick move down in gold. But if you're coming down on where are we at the moment? 31 spot 4, 29, 2 spot 4 on that, you're looking at a 10% fall, whereas gold only going to be another 3 or 4%, maybe 5. So there is gearing into that, and that in reverse, once we start going up, we showed it started to happen. I think it shows you in the motive wave that for silver, that's really taking hold. We're going to get wild swings, and silver, good chance of it 50 as gold attempts to go to 2,500. So really, if we've not traded it before, we want to close our eyes and jump aboard, I think. So keep that definitely on the pad. So I'll just run through some other charts, unless there's another chart anybody wants to look at. So I just wanted to show the setup in the Dow, because we thought we would put in potentially a wave 4 low after this ABC move down into April 19th, and then that would be playing out. Now, within this is sort of important for looking at things in wave form. The wave 1 up that we put in here, then the rest of it consolidated. And we had what we thought was going to be the first wave of the breakout in wave 5. The retracement that we've seen in the last few days has extended, and it's put it now as a wave 4 to go back into wave 1. Suggests an invalid overlap unless we were doing what they call an ending diagonal. But for that, you'd have lots of 3 waves that were overlapping all the way up. It's completely different structures. So it looks very much like this wave 3 top over here is doing a 3-leg consolidation at least, which has put in a very slight new high. So that's called an expanded flat. So you would expect the downside to potentially come in somewhere down here. It'd be very close to either just extending to the low 37,200, or maybe just going a little bit below that if that is a slight expanded flat. So to be totally true, you normally see it go beyond the realms of the first wave down. To do that from here, where we're more or less trading on equal legs, and we need one more 5th wave to complete WXY. We should be getting a bounce from that, and that would sit, because to get now down to a brand new low would break the 1.618. So if you remember, once we do that, we're normally into motive wave down. We don't think we're at the end of a pattern that is reversing yet. So to me, I would expect this to probably put in this 5 in the next couple of sessions, if not today at some point. If we fade, it's probably more likely to be the start of next week. And then we get 3-wave move up as an extender. Ignore that 2 for now. That's going to come later. And we'll get another equal legs down. So how would that look? We're trying to get to slightly below. Sean B, thanks for joining us. No problem. Just bang any questions on the chat, or we'll see you Monday. So if we're going to do an equal legs of this, and we want to get into, we can kind of back it out to see, have an idea where we might go to. Some people don't like doing this, but I like to have this as a kind of background idea. If we go from that high over here into what let's just say where that 4 is, we'll have that as a low. Where would we bounce back to just get in a small low? Let's just say it goes to there. All right, so we could expect a rally maybe back up to 39,000, and then we can do that with a retracement idea. Let's see just how far that retracement that we're suggesting actually is relative to that wave. See if it makes any sense. On the same idea. And you can actually do it from the fib levels and invert them, but if you wanted to see the picture. So that would get us back to spot 382 to spot 5. So that's a classic for a connector, is around anywhere between that spot 382 to spot 618. So that makes sense, and that would get us into an equal legs consolidation. So that is strong, I think, for where we might expect to see the bounce go to once we put in this little 5 wave. It doesn't have to be it could just be a tiny tick down as a 5 wave just to make it complete. Um, Top trader gold, DG30 going to hold. What's DG30? Big Ben has arrived. I think it's someone at the door. Um, what's DG30 going to hold? What's that? Top trader, are we back on gold or are we talking down? What are we doing? So anyway, once that comes in here, that will move the 4. We're expecting the 4 probably to come in over here now. This kinda doesn't make sense. You can they do occasionally happen, so we can't rule it out. There is a low probability that that could be a running flat. They don't happen that often because generally it's a lazy way of doing it because you don't get that many truncations. That comes down, we'd expect it's more likely that you get the equal leg scenario and the expanded flat rather than the running flat. People generally go for those when they've run out of ideas, 'cause normally it's a 1-2 scenario. It's a nesting thing. At the moment, that's not my favorite. Don't like that. I still think that we're in a consolidation pattern rather than, um and the fact that we've got more like 5 waves in there than a true ABC, WX, ABC's in there, WXY. Cool. What is it you were trying to say? Oh, right. Okay. It was. So my highest probability is that we do an equal legs and we go to just a slightly lower level than April the 19th. We'll look out for any valid change in that structure. Nasdaq, which we tried to have a bounce with. Again, we've been looking at this. It's a very similar thing, and we have put in a newer low, so this is more likely that we could be putting in something that bounces, and obviously it traded, um, is trading with slightly different instruments in the ascendancy. We've had that little bounce up today. We need to keep an eye on that. Is that gonna be the connector before we go a little bit lower? We'll have a look at that in a minute. The important thing was that if the trend channel and the way that we're trading, so coming off what is here as, excuse me, an intermediate wave, 4, it's all about how we grind up. I'm expecting to grind up to finish this. These are already, um, in place before I put the trend channel in. There's sort of extension potentials. So looks like we put a 5 wave in to put that 1 top in just after NVIDIA. Been retracing ever since. Then we're gonna put a 3 wave in somewhere in here, and then a smaller 5th wave to finish that whole thing. We'll be deeply back into that 3, 4, 5 pattern as soon as we've put in the consolidation that we're doing at the minute, and we'll go and have a look at why that is showing what it is. So again, we'd started off earlier in the week. We weren't sure whether this 3 wave move down had done enough to finish off the pullback. It was a valid 3 waves. That definitely could have been a wave 2 to start with. And then we had this rally up, which again, we weren't sure whether that is 5 waves or whether it's an ABC. So to start with, we thought that's a breakout, and we were gonna get this 3 wave pullback into here was gonna be where the wave 2 sat, and it was valid. It wasn't taking out a new low. We were looking for that to be a sign that we'd then break out. It was around the time that we had Musk putting all his money in, et cetera, but we still managed to sell off. This broke down, went back in. So once we came here, we had a rally and we broke down again, then we know that we're into a different pattern. start to invalidate the previous structure. So this 2 can no longer really be where we said it is. It's gone. It's out of here. So what we're looking for now, so we want that structure to be equal legs. So we draw it from the top of the previous wave 1. We've had an A, we've had a B. So where is the 1 level going to be? So I haven't actually extended these lines across, but we will do now. We're looking at it. So that puts us in equal legs kind of territory, is more or less around here. And what we're looking to happen is to have 1 more blow to complete the C wave. Now we've validly got that in place before the data and we've bounced. So this could easily be a wave 2 now. It's a valid wave 2. It could be an ABC. So it's time to consider that as a valid structure. Now again, the subwaves within this C wave down, if that is an ABC structure, we've had an A to here, we've had a B, and we're looking for 5 waves down, of which C waves is always 5 waves. If you didn't know that in the finishing pattern of a consolidation, so you're looking for 1, 2, 3, consolidate, 4, 5 down. So that is a valid 5 wave structure. So is it anywhere near equal legs? On this one, we'll extend that now. So kind of got a confluence of the bigger picture is in the equal legs basis, and the C leg itself has split and is in an equal legs basis. So a double confluence for that being a valid stopping point. Does that mean it's over? Not necessarily, but we could, because we could see this as a connector up. And again, we'd be looking for it to retrace 38 to 50% of the way back. No, the reason I use Elliott wave, good question, Al Haditha, is the fact that Elliott is a lot about sentiment waves and sentiment indices. It has a lot of the news flow built into it. So you're looking, often you'll find that things are predicted in a way before the news has even come out, or the news has said something that then doesn't happen. And you think, one will be out of kilter with the other, but generally the wave pattern takes precedence. The volatility, the power of it is that you can have a number of alternatives which you can start ruling things out or ruling things in, and then that sits better with your kind of volatility ranges for what the news flow could do, which again is why quite powerful today. We're building up the fact that we're very close to these lows on a lot of the indices. Even if, as I'm going to present in a minute, we might go even further down. The fact that we're very close to what is a natural ending point, regardless of whether you're bearish, think it's going down, or you're bullish, you think it's all over, both of them will start with a 3-wave move up in the very least. So if you're going into data, we presented that the fact the market was extremely negative, looking for inflation prints, and I showed that it was set up to almost be impossible to miss, and could even come in with a beat on the data because the technical nature of that. Then that was, to me, that's one of these things that we're looking for. We've got a fundamental and a technical picture of both suggesting that we could be going into a bounce area. So hopefully that is kind of clear. I'm not back jobbing now. I've talked about it going into it. So I think that is where Elliott wave can be very powerful. A lot of people fall out of love with it because you've got to do a lot of maintenance, and you've got to be aware that it's the highest probability. There's always an alternative that you have to keep in mind, and we're looking for narrowing that down. And then you're looking for confluences like the fib retracements, all the blocks, fair value gaps that line up with those regressions, etc., and/or extensions. I think putting in the extensions are powerful. Some of the rules within Elliott is that the 3rd wave is generally the biggest wave. That's normally where the 1 spot 618 lurks. You have that in the back of your mind, and that's why when you look at consolidations, they're generally somewhere between 1 and 1 spot 618, and once it goes beyond that, you've really got something else. it may still be a consolidation, but you might need to look at the waves differently. And it's normally telling you that you've gone into extensions, and you need to subdivide it. So again, you'll have been following something. You may or may not have been into your trade, but it's then gonna stop you doing the wrong trade. You know that you're going into something else. So I think it's very, very useful. I've, played around with lots of things over the years, and this is just something that sits well, particularly for what I think you should be doing is having using this as a basis. It doesn't stop you overlaying other things. Edward, in fact, on that chat, is trying to overlay that with his ICT stuff. And, as I said, the confluences of using the Bollinger Bands for shorter time frames, exit and entry, along with where we think the waves are, throwing in old school head and shoulders. That happens a lot when you're looking at waves. You see those more often than not. It's all good stuff. Very happy to talk and introduce and bring other things in that other people like to use. And as some again was saying on the chat earlier, using candlesticks when you get right down to the timing minutiae, engulfing candles and dojis can often line up with where the turning points, the trend changes are coming, etc. So hopefully that makes sense. I mean, the fact is, I will continue talking along these lines, and I'm very happy for people to throw in, where they think things are, whether that lines up or contradicts. That's the power, and that's where we find more and more better entries. We're just trying to get everything in our favour, aren't we? So yeah, what I said on that. Let's just dial this out a little bit. Where we are in that trend channel. So in terms of the wave one, where would we expect to be? Let's get that out. So we're in the minor wave one up of 5 of this 5th blue wave. And these are subwaves, obviously. So what I want to do now is see what level of retracement we've done already and how much further down we could come. Flippant of me, but I would probably agree with you. There's bits within that I've seen that I think, well, that's just regurgitating old stuff in another way, and I've seen far too many people complain about it. This thing, waves, has been around a lot longer, has been updated. People look at things a little bit more in this terms of equal legs. Well, yeah, what did it say? When you've got consolidation, equal legs is often the most prevalent consolidations. That's your first starting point, and then you can work within that. There can be other ratios, but that is always a good place to get your target kind of range to zoom in on. We can then look for the internals to go our way. Right. So now that you believe that is a one wave up, we want to see what the retracement is. So I'm just going to dial in a bit more so I get the right points. So we're there, aren't we? No, there. So now that we don't, this is just to try and help decide whether we're going to do a double consolidation or not, or whether we've done enough. So down to this equal legs here, we've come into just below spot 236. That to me isn't enough really for a two wave. It's possible, but generally you get deeper two waves. So we stick with what happens more often than not. And two waves can be quite extreme. Like what will often confuse over time is that two waves can almost be 100%, which really catches people out, but not really expecting at the moment. And the reason for that is the trend channel I've got drawn between 2, 3, and 4 blue, which is what I said, as you progress through the waves, that becomes the most accurate for finishing point. I showed earlier how by drawing that in, actually marries up with some previous work I'd done on where we might finish these waves. So that gives me confidence that this channel is the correct one. So for ultimate bearishness, we might look to just test the bottom of the blue channel. Where would that come in at? That would come in around here between the 50% and the 61.8. That is the most likely finishing point for a wave 2. Can be before. So that almost is suggesting that we're gonna do another double correction. So we're dealing with a connector at the moment, so a rally that's gonna fade. So let's wind back in and see what effect that has. So we'll lose that one because it's a bit too colorful, isn't it? And we know what we're doing with those, so we'll get rid of that. So we'll go back to that idea, which let's just say we're gonna go we have in mind we're gonna hit that lower channel again. Like I say, a lot of people don't like doing this, but I find it quite helpful because this is the only element of it which is us putting our own interpretation on where it finishes, kind of ballpark. So where'd we rally to in order to be meeting that trend channel? Somewhere around here, which suggests that we can rally up here to sort of 18,660, maybe a little bit higher, and then look to equal legs. Then we could make our way down here, intercepting 18.1. So that is, we have that in mind as being a potential equal wave, in which case we can move some of those things. If I can get hold of them. So if we've had ABC down and it then extends, and we're dealing with sort of WXYs, which are the higher level, so we'd actually call this would be a W. So the proposed, once that C wave's finished and we start rallying, we'll move that there. We'd expect this to move up to, where did we say, 18? Around here, 18,700, and that would be an X wave. This is what I was saying to a guy on the thing. It's important as you go along just to get in some form of labeling, even if you move it just so you know what you're talking about. You keep saying you're in a C wave, and people go, "Which C wave?" So then potentially you would have Y over here, and that in total would be a WXY. Down here. So this would be a 3-wave movement down, an ABC, and the last C leg would be a 5-wave move. So that'd be wave 1 up, wave 2, and then we'd be looking for a nice. We'd move all these across. I mean, this doesn't necessarily have to happen. It can happen, you know, quicker. We're talking about early June, aren't we? So as long as it's within here, it's a valid kind of ABC, XY. Just timing wise, it could be from there. And then we'd expect to come up here and have a 3, and then eventually we'd come across here and finish we'd have a 3 to here, 4 down, and then a 5 to finish. So that's quite likely. With the Nasdaq, we know consolidating wouldn't take much of a profit taking in Nvidia just to get in a little bit of impetus into that. So look out for it. Either way, we've got a valid situation for a wave 2 in place. You don't have to come to the bottom of this wave channel. It's just we need to be aware of that happening. So keep an eye out for entries, and we'll have this in the back of our mind as a pattern. For next week's session, I will go through S&P equal weight and the S&P itself, because they've been acting in a different, quite a funny way this week on certain days, all due to which constituents were moving, kind of suggesting that there's some rotation going on. So we'll have a look at that on Monday. We've done the dollar. How's our dollar play looking? That's one to look at, isn't it? Like, there's Hello Teacher, isn't there, who does use the pitchfork, and that is a way of putting in channels with Elliott Wave. But no, I put that on as a parallel channel. That's what the very original ideas were that were developed by the Elliott Wave guys, wave theory, Napier, etc. That if you start it off from the end of your start of your trend change, and then you'll get a one wave and a two wave, and then eventually a three. You have a trend channel, which sometimes gets broken when you put in the four wave. Once you get 2, 3, and 4 in, you change from 1, 2, 3 to 2, 3, 4, and it's generally 2, 3, 4, 5, which is more accurate once you've got a feel for where it's going. So that changes, and it changes with the gradient. So these things do change, and I would implore you. I know a lot of people don't like using trend channels as an only way of entering, and neither do I. I like to have it as another confluence. But if you put them in various parts of the pattern that you're looking at, and then put it in where you think you've got a trend change, you can measure the gradient of them, and when it goes steeper, that's when you know clearly that it's in an impulse, or if it's slowing down, you're more likely ending a move, or you're going into a consolidation. So it's quite pictorial. You either see it, the impulsing and stuff. It's sometimes people just look at the chart and they can't see it at all without putting, an overlay of some sort on it and indicators. But the trend channel for me just really brings it home and gives you a good guidance of what's going on. So dollar-wise, remember we got our Del Boy turn. We said we were going to hit this one, make a move up, and then turn. Ultimately, we had that consumer confidence number and the jitters again with Dudley and everyone else chatting on Tuesday, Wednesday, Kashkari stuff. The market wasn't in a good mood, was it? So dollar started rallying. I immediately put in this, well, what's an equal legs of, is this putting in equal legs, double consolidation in, where would that get to? So originally we said, how would it behave at 104.3? Would we come straight through it? Would that first leg have been enough? Well, ultimately it isn't. We've had a high up to here. Now it's not quite a 1-for-1, but it's going to be above spot 618, which is another stopping point. It's valid the fact that we've had a higher high. You know that is a potential stopping point. Looks like a zigzag. We marked it up earlier. The first 5 waves up, which were 1, 3, 5. The impulses, the middle one wasn't the shortest, so we then had consolidation and then a breakout. So that is valid that that's finished, or may have finished, not necessarily. So now we're again down here. So unless we start taking out previous lows, it could still be the halfway point to this actually being the 1-for-1 consolidation. It could be another 3 waves up. The dollar has repeatedly kept going through this reversal pattern, whereas you just think it's breaking and it puts in another retracement. So we've had lots of nesting 1-2s for months now. We do still think we're breaking down. It's just ultimately when are we going to break the 104 to really make that happen? But as it is, we've got our relief rally dollar play, which is supporting all the potential connectors. In order for us to have breakout from what we've just talked about in the indices, for us to actually be at the end of moves, we need this to probably break through next week and beyond. Obviously, we go into a little quiet period from the talking heads. There'll be no Europeans, no Americans as they go into their 2 meetings. So it's going to be about data without much guidance from the Fed people. So we'll have to get very technical to see probably where we're going, and it is the start of the new month. So lots to play for there, and we're very close to a challenge. You know, that really needs to that breaks. It's not part of it shouldn't be part of a three-wave up. It should be an actual impulsive move down. And they'll start to get all excited that we might get through 104. Is that clear for the dollar? The other one, I don't know if anyone's on here that was following it. I know somebody was waiting. A million apologies. It's played out like a dream. On the Nikkei, I said we're in this sort of converging leading diagonal for one. We had an option looking for all these double three waves. We just had to make sure that the third one was big enough not to be the shortest. That was a challenge. I didn't come across the channel, which again hinted that it was going to have this third leg up. Got that, and then we had a crossing of the channel in a three-wave move. That could have been a four, or was it going to be another protracted, bigger set of three to put four here? But we leaned on one being in place. We were waiting for a double correction after that to hit this two level down here, and to me that tells us that that's four is gone, and that five that isn't one anymore, etc., etc. So this 4-5 is valid. We've put in a valid three wave, and we've bounced. Should be the two wave, but again, if we are in line, and we said because this has been going sideways rather than steep up and steep down, that this wasn't a leading index for the minute, and it still isn't. It's had a lovely jump yesterday and today, but this, if everyone else is going to do a double correction, this could as well, and it is valid that this could run out of steam, and again put in a double. So what did we have here for that was that one stayed within the 1 to 1.68. We were happy that that was the fourth wave over there. Just get rid of that. I believe that in because that's still instructive for the thing. So let's put a double in for this and see where that takes us. Like I say, I like to keep a lot of my charts still full of the older levels because it's like a pictorial journal, isn't it? That didn't work, did it? Did you do it? No, that went wrong. Let's redraw that. So the important thing here is that if we do have a double sell-off, it doesn't take out that previous wave 4. Again, in which case, what we've got is a WXY. This would be a connector probably, because the wave 2, that can't go beyond the starting point, or that is something else. That's one of the primary rules. So we know we've got that as an invalidation level. So keep an eye on what's going on in other indices. That could end up being another thing. The key point to this was we were looking for a three wave. We said that we should buy it at that 2 level. I was annoyed. I looked at it, going to send, got distracted with something else, ended up having to send it to you yesterday afternoon after it had already moved. But if you'd have gone again yesterday, you'd have doubled the move anyway. Again, want to keep an eye on. We know we've got this, what is a previous, our first instance of a 2 low is now a stop loss. If we want to carry on playing it long, but keep an eye on the indices, what they're doing. And this is now a new potential double extension wave that is going to be valid. So that is in the mix of what could happen for the Nikkei. It's played like a dream so far. Obviously, to be more or less guaranteed bullish, we need to break out above that one low there. But remember, because it's a 2 wave, you can have that expanded flat thing where it goes above and back. So again, you'd want to see it breaking out to be at sort of 1.5 times the length of this wave to the upside. You want to see 1.5, 1.618 for a breakout, and then you're pretty much guaranteed you're bullish. Obviously, that is quite a move in the interim. So it's all about finding entries at the lower degree level, and leave that up to you guys. I'm not here to definitely tell you what to do. I'm just trying to guide you as to what the most likely things. What time is it? 3:00. Oil, just to reiterate, on the hourly level, what a pig it's been. Lots and lots of info up and down. Still can't break into the 80s. We said over here, didn't we? We're going to be stuck in this 76, 80 level. Right back in it again. But just disappointment after disappointment, isn't it? Every time they get a drawdown, it just doesn't last. So not even going to bother suggesting a play in oil at the moment because it's just dull. The DAX, I want to deal with the DAX on Monday because it's obviously almost guaranteed interest rate move day. So we're going to focus on a bit more on the EU and DAX on Monday onwards and for the weekend preview. But we'd said that this was either a 4 here or again connector and a double. And within that, the first instance you look at that, you think 5 waves really, consolidator again. And the DAX for a long time has tested and held this trend channel that I've had in for months. So that almost looks a perfect scenario of another 1-for-1 and hitting that. So it all kind of leans towards fading rallies, doesn't it? A little bit of weakness next week and then off to the races. But we'll have a proper look at that next week. When it goes, again, I'm looking for a similar, for whatever the wave 4 low is, wave 1 and wave 5. So wave 1 across here is a classic. When you have a big extending wave 3, 1 and 5 tend to be the same length. So we'll look at that, and that's what gets us back up towards the top of the trend channel, sort of in advance expectation, consolidation, blah, blah, blah. UJ, again, so better data, the chance of interest rate moves, Tokyo CPI, etc. The fact that it hit 157 again, there was chatter that they might be doing a little bit of buying. Certainly started. They sent out one of the other Bank of Japan guys, didn't they, to talk that up yesterday, saying that they're watching it, very happy to do something. I think they've got room for a rate move. So it was just enough to get this in. I think today's data was important, but that does start to give them an excuse. But do not mess this up because this is still in a kind of nesting situation of 1-2s, still the potential bigger break to come if they mess up. Obviously needs to put in a new high to confirm that. Otherwise, it's just a consolidation pattern that comes off from this initial intervention push down. So it's interesting, and it's a good one for literally listening to the fundamentals and listening out for option volumes are taking place, blah, blah, blah. But they're not necessarily going to do the big next intervention in the yen. They're going to do it by literally selling their US treasuries $4 and buying back, using those to buy back yen. So it will be, that's how they'll do their double whammy. But at the moment, and today, that's obviously been helped by softer data and the end of month relief rally. I mentioned silver. I do apologise. I didn't even move on to that. Gosh, sorry. That's what I was saying there is this is potential nesting. There was a bounce off the 157 level yesterday. Softer again today on today's data. They started doing a lot of chattering here about intervention, but it's setting up to have a breakout unless they do actually do something, in which case that ends up being a top and this is a consolidation to this initial impulsive move. So it's difficult to tell at the moment because this one is, unfortunately, one that's being a little bit led by fundamentals and speculative sort of attacks on it, really, which are, again, it's a fundamental thing that can be quickly solved by interest rate hikes, et cetera, and the right language. Gun silver said EU we are going to look at in the main next week, but what will probably happen is that this was an extension too, and as I said, with the dollar beginning to weaken, there's potential for this to carry on grinding up. At the moment, the data is sort of helping the pushback for rate cuts in the EU. So that again, that's a relative strength argument because the rate cuts are going to come further in the year. With a weaker dollar, we should be able to grind up to this original 110 idea. So we'll look out for next week. I'll have a look for alternatives over the weekend. Must apologise. I'm absolutely rubbish at pressing share this tab. So yeah, I was saying there, the 2 wave will come down to here on this by the look of it. The fact that they're going to cut rates next week, but push back to September, the dollar weakening, we should get this continued grind up to 110 before we have to make a proper analysis of whether that is the right structure, I think. FTSE again. It's all we said that it seemed to be in pause mode. It's following what everyone else is doing. You can pretty much see there on the daily level, it looks like a double consolidation and a bounce. Has that got room to come further down? So it's a 4th wave relative to a 1 wave, which is way over here. So yeah, tons of room to even break back through the 50-day, test 8,000 and go again. But again, I think this is going to be led by other indices. But we're still in the 3, 4, 5 heaven. It's just about finding the bottom of it. Don't get panicky. I'm convinced this is not the move finished. Where's that gone? Right, so here you go. We had it at the start of the week. We said the move indices, I'm not worried until they get a little bit lower, but we could have, if we have a sell-off, a trading sell-off, and we would bounce up to this sort of 15 level on the VIX. Obviously, a bit more volatility into bonds have been selling off. Now they've been bought on the back of dovish data, and now they're selling off again. So the implied vol of that kind of movement, and that's what you need. You need volatility. Then obviously that is going up. Generally happens when things are weakening a little bit. So nothing to panic about just yet. It's a kind of expected move off an extended period. I do think, as I said, we're probably going to range trade around that because we've got this 3, 4, 5 heaven. If we put in doubles, we'll go into here 16, 17, and then we'll have the sell-off. So it's only when we're really up here in the 20s plus that there might be something panicky going on. So this is just kind of the increase of volatility that's getting priced back into the indices. And then last but not least, very similar to the EU is the GU. Again, we'd said previously that was a valid 3-wave wave 2. And from here, we're looking at where would an actual double come in at. So if it were to sell off again, it would come down to this sort of level. But the way that the EU and GU are playing and the way that dollar is weakening, this is strengthening the fact that this possibly a a wave 2, and we're in the early subwaves of the big breakout 3 wave. So again, looking for this to have a small pullback and another move up to put in a 1, and then the whole pullback can't go below this 2 wave, or we will be in that situation. It's probably an extension. So lots to look at for that. We'd like to see that go to a new high early next week. Could well be the trade for the start of June. So I hope that was all clear. Are there any other questions before I go? Anything else you'd like to look at? Any data? If not, good luck with your trades. It is the end of the month, so just be careful for weird volatility. And we'll have a look at next week. Brilliant. Thank you, Bletchley. We shall all speak again. Okay, what's that say? Hello from sunny Amersham. Amersham. Not sure what that says. Late today. You're irritated you were late today, maybe? It is recorded, I think, so you should be able to watch it if you want. See me stumble around with tech again. But hopefully that was useful. We went through. All right, okay. Well, yeah, thank you. Al-Haditha. Al-Haditha. You have to spell it out for me so I can say it properly. Leo Perez. Yeah, no worries, you've arrived late. It is recorded, so you'll be able to watch it back if you really need to get to sleep. I've gone over gold idea in depth, some of the US indices, run through most charts briefly. We had a look at how to look at a piece of data when it comes out, to be able to do your own maths on it and the reasoning behind what we were expecting and why it happened on PCE, which hopefully allowed a few people to get a little relief rally in before it faded. But it just showed you how we can marry up fundamentals and technicals into these data points. It isn't a gamble necessarily, blah, blah, blah. You should please change your name and make it a lot easier for me. Have an easy nickname for me. Or I'll just call you Al-Had. So have a run through it. There are some interesting bits, and obviously come back with any questions. Yeah, I went through the data points as well, just ran over what they meant. If you get any questions, either put it on the YouTube thing, or ideally put it onto Market Chat with Planty, Market Watch with Planty. I'll always come back to you anytime on that. So if not, we shall see you next week. Enjoy.